10% correction has kicked in, but I just want to politely remind our viewers that it's not for the first time we've seen a 10% correction. 10% correction in any bull market, when you look back and analyze the reason of that correction, it will be like a passing phase. But data is data. They say that you look at data to understand future. Well, that's what we all do, and that's what Kunal does, which is what, so we'll use his expertise to understand that when we've seen a 10% plus correction, what have been the extremities of those corrections, which is that how much more can it go? And if it goes, and if this correction has to test its previous extremes, how deep the correction could be. So Kunal, we are at a 10% correction on the Nifty. You know, a year from now, it will be passé. Nobody will talk about it. But today, everybody is talking about it. So for those who are focusing on today, they want to understand that how much more can the Nifty go if the previous patterns are at play.
Fantastic, Nikush. So, yes, as you rightly said, that we've seen through a phase where markets have corrected more than 10%. In fact, just in 2022. So, I've flagged off all the zones where the index have gone through a correction of more than 10% or where the major corrections have ended. So, this chart which you can see for the index is the chart where major corrections, whether it's in 2022, 23, prior to the COVID correction, all of those points, the corrections have halted at this major moving average. This level right now projected to be at 21,400, 500 zone for the index, which means assumingly, say over the next 1 week, 1 month, if the pace of fall for the index drops down, then we may probably make a higher low, maybe around the 21,600 or 700 mark. So I'm keeping a ballpark number over here of 21,500, which could be a worst phase of the correction, something very similar what we've seen in 2022, 23. So that becomes a one major support for the index. Then we look at the minor trendline supports, like for short-term traders, someone is looking out for an immediate support point. Now, this trendline support, which you can see from 2023, this has played out fantastically well over the last 3 major phases when the markets have corrected 10%, as well as those points when even the phase of elections, where the index fell by 20% on intraday basis, all major corrections have been absorbed at this trendline support. That's around 22,800 mark. So that we earmark as a very short-term support for the Nifty. The third chart is the most interesting one, Nikunj, because this tells you that the behavior of this correction will now start to change. Now, this is the RSI for the Bank Nifty. The lower chart is where you can see the Bank Nifty charts. Now, whenever the Bank Nifty hits a oversold territory, the pace of correction halts. It's not that the trajectory will drop down, but the intensity with which the markets go into a correction, when it touches the oversold territory, it then goes into a process of a bounce, then a correction.
So we are in that climax now.
Yes.
It's like the last, like they would say that the last bomb has exploded.
Yes, the last juice is about to, get secreted from the markets. And that, I believe, the max could probably happen when we correct by maybe another 1,500 points on the index. That's 21,500 mark as per the projections on the long-term averages.
Okay, so 1,500 points is the maximum downside which Kunal feels you could get in this correction. I'm talking in Nifty here. 1,500 points is 5 to 7% more. That may automatically multiply into 5 to 10% for mid-cap stocks. But that's the time when if you correct 5% plus, that's the time you should really start shopping rather than running from the fall. That is what the technical indicators are indicating.